The Indian rupee is teetering on the edge of a historic milestone that's got everyone on edge. Could it really plunge to 90 against the US dollar amid a frustrating trade standoff with America? If you're new to currency markets, this kind of volatility can feel overwhelming, but stick with me as we break it down step by step. Reported on December 2, 2025, at 4:55 a.m. Universal Time Coordinated and updated at 6:27 a.m. Universal Time Coordinated, the story unfolding in India's financial landscape is one of mounting pressure. Throughout this year, the rupee, that's India's official currency, often abbreviated as INR, has repeatedly brushed against unprecedented lows, testing the nerves of investors and everyday folks alike. For beginners, think of it like this. When a currency weakens, it means you need more rupees to buy the same amount of dollars, which can make imports pricier and squeeze the economy. Experts are sounding the alarm that without a swift resolution to the ongoing trade negotiations with the United States, the rupee might cross that critical threshold of 90 per dollar. Why is 90 such a big deal? It's what's called a psychologically key level, a round, symbolic number that can trigger panic selling in the markets, much like how hitting 100 might feel like a psychological barrier in other contexts. Imagine the ripple effects. Higher costs for everything from oil to electronics, potentially fueling inflation and affecting your grocery bill. On Tuesday, the rupee touched a fresh record low of 89.92 against the dollar in domestic trading. Check out Bloomberg's INR quote for real-time data at https://www.bloomberg.com/quote/INR:region. This slide was largely driven by the prolonged delays in sealing a vital trade agreement with Washington. To put it simply, the U.S. has imposed some of the steepest tariffs, essentially taxes on imports, in the Asian region, making Indian exports less competitive and denting overall economic confidence. In the offshore non-deliverable forward market, where traders bet on future exchange rates without actual currency delivery, the rupee dipped even further to 90.13. See Bloomberg's IRN+1M quote at https://www.bloomberg.com/quote/IRN+1M:BGN. But here's where it gets controversial. Are these U.S. tariffs a fair play in global trade, or are they unfairly punishing emerging economies like India to protect American interests? Some argue it's smart protectionism, while others see it as a barrier to free trade that could slow global growth. And this is the part most people miss. India's push for diversification into deals with other partners, like the EU or ASEAN countries, might soften the blow, but will it be enough to steady the rupee? What do you think? Should India double down on talks with the US, or pivot to new alliances? Drop your thoughts in the comments below. I'd love to hear if you agree that this trade impasse is the real culprit, or if there's more at play.